wake up, God damn it. Welcome to MarketCast with Unk and Market Monk. Morning, P. How was your week?
Oh, really good. Just I was you're definitely right on some of these pivots, and I mean, really, it was just a matter of them going farther than I expected. So you never feel like you have enough of the move, but I think you always have to kind of break yourself of that mentality because you're just gonna find the next one, and it's repeatable and not a big deal. But I was able to keep some things, cat DE the crypto stuff I've been on. So that was all good. Um, Nailed Roku. Just had shares though, but still it was good.
Yeah, it's definitely that was that was my note. That being, I think I said it a little late the week before, but just be prepared, for when the stuff gets up. Definitely didn't get it all. Definitely didn't get all of what I wanted. Definitely didn't even get all of like the ones I wanted, even a piece of them. But I definitely ran out of funds on Thursday. That's for
Yeah.
sure. Um, so after that, really, I mean, to me, that's kind of easy. And I mean, you learn a lot about yourself in that situation. Um, whether you can just put money into things or whether you have button hesitancy, it just kind of lets you know what your weakness is. um, and for me, it's really not getting in things I trust. It's the management on the other side. How long to stay in them, how much to take out, what to leave. That's where the mental gymnastics come in for me.
Yeah.
So this week will tell how good I did last week. But I'm still on the less is more and don't mess this year up for me. But that was a good start to the month, to say the least.
Yeah, definitely. And I think, one lesson too that hopefully people see is when some of this stuff does make a move, even if it's huge, 15% or 20% or whatever, you don't just immediately short it after that. Because like Lemonade went up another 8% after going up 45%. Roku went up another 8% after that, whatever, 19% day that it had. So the kind of the pop and fade thing that we've been in for a while now, at least on the shorter time frames, is not working. So like you have to be can't just see something go up and immediately short it. Just like the endless dip buying with stuff like solar and all that was going down, you you can't just make that you can't make that assumption. You've got to take a minute to kind of take in the larger context and what's the mood of the market, and it was just going to keep going. So um, if you miss something, you either step away. Um, you can chase things sometimes. I mean, it has to be like to me, there are a couple of particular stocks where I will chase a move a little bit just because I kind of know that look. John Deere is one of them, but I don't think you just go look at all whatever random things that you're not prepared to trade and just try to jump in. That's not what we do here. We don't put all this work in to then trade like that.
Well, I'm not be. I mean, you can see me kind of like, I don't want to say pivoting, but I'm trying to find a way to communicate things properly. And my only um, check on that, like my outcome is our testimonial page. So when I see
Yeah,
people trading like Fubu and stuff, now I know I'm on the right path. Um, but it's designed to be early. I mean, everything we do is designed to put in the work to be early. But the main point of being early is to minimize risk. That's why I
yeah,
mean, that's the opposite of chasing. And to kind of touch on, I'm with you on chasing. I think we all have the ones that we're comfortable with chasing. But for me, the number one thing I have when I'm chasing is a target. If I'm scalping coin, I'm only taking a couple $100 out of that thing. It's just I
yeah,
trust the move. It's back to my Wall Street Robin thesis. It's I'm trying to find a window big enough to get this TV out of and not hit my head or my knees on the way out. I just want to get one TV out, and A lot of people should have that stocks. I know I beat it to death, but Pele and Invax is still paying the bills over there with that. And I think everyone,
Yeah.
once you pick that up, you kind of just apply that to the next stock. And that's where you find where you're most comfortable at. But I think that's chasing is like you just graduated. You know the stock now, so you know what you can get away with. Um, but what kills people that I see when they chase is they don't have a target. They don't have that exit plan. And when you're late, you really need to have an exit plan.
Yeah, absolutely. And as far as being early goes, good example is Roku. I had this line at 60.24 almost 2 weeks ago. I said, you can add under this line. Got to be November, and it should be about 65C. So that wasn't that dramatic of a move, really. But if you're already in that, you're positioned in it, shares, options, whatever. When it does do that move off earnings, that's a hell of a lot easier than sitting there with something up 10, 15%. Oh, should I hop into this? Because with options in particular, the premiums are just going crazy at that point. It's hard to get a good fill for a stock that's running. You get a bad fill, you're down 50, $100 2 seconds after you buy it, even though the move is going in your direction. So it's not really where you want to be with this high IV stuff. And so that's why we do emphasize the pivots as much as we do.
Not to break up an individual ticker, and you know why I'm watching it, so I don't got to explain to you. But
Yeah.
SoFi, like I watched that for pretty much the better part of 3 weeks, and it was because of that why I posted when it flushed those contracts flushed to 10 cents. I mean, they flushed to worthless with 2 weeks. So, and just in my head was like, if you get any relief on these contracts, they should come back. And I'm not even an options trader. But the
Yeah.
only reason that came up, they're still 30 cents. They ran to 50 from 10 cents. The ones I was watching. I'm assuming all the rest of the eights did the same thing. Um, but the thing about that is the only reason I caught that is because I was actively watching it. If you're not
Yeah.
actively monitoring things, you're not going to catch the move, or you're going to wait for an alert from a guy like me or you to say, hey, this looks good. You still got to trust yourself to buy it. So either you're blindly following or you're paying attention. You can't just show up, I guess. But man, if you just pay attention to a couple things right now, your time will come. It really will. I haven't seen many plays that have just been like, oh, well, that was a piece of crap and we shouldn't have been on it. Most things are just taking time to get into their cycle and being very profitable from here.
Yes, and that what you're mentioning is it's a trend I noticed from the people who just sort of pop in that our setup will make a move and they'll be like, "Is this still good?" Or they'll be like, "Do we short this now?" And I never am comfortable with that question because in either case, like I'm moving out of it already. I don't like to tell someone I still like something as I'm selling it, even if I kind of do. But the point is, I'm taking risk off the table at that point. And so, if you are someone who just sort of pops in, you don't have a lot of time to devote to this. You're sort of, you're engaged at whatever ability, you're able to pursue this. That's where you need to be early. You need to find the stuff that you can just sort of set and forget for a bit, and that's what you need to trade, not the kind of the stuff making the big sexy moves, because you clearly don't have the time and engagement to trade that stuff. And I'm not even trying to be critical. That's just the reality. If you're going to watch something move 8, 10, 15%, and the bigger the stock, the more significant that kind of move is. If you're going to just watch that happen and then ask about it, there's something wrong in your process, and that's something we have to work on.
Yeah, and definitely. If I didn't have time and when I didn't have time, I was just really focused on one or two long term things. And
Yeah.
the thesis had to be there, and then it was just basically giving it time. I mean, because that's what I didn't have. I didn't have a lot of time to put in, so I needed to give it time to happen. And I mean, I got lucky. I picked a really good one with NVIDIA back then. But I think right now is a good opportunity to live that because a lot of stuff is red. So if you just are a 3 month buyer on a lot of this stuff, you're probably going to be doing good next summer. Um, and we have an example of that of last October. I mean, if you bought pretty much anything back there, you were doing good in the summer. But you got to do that front end work just on the company. Maybe know that they're going to have a catalyst that hasn't happened yet, because you need to get in front of all that stuff. If you're waiting for the catalyst to drop and you're not present daily, you're probably going to be the one holding the bag at the end.
And yeah, and we're right there on a lot of stocks. I mean, Twillo, Dollar Tree, like I mean, there's stuff out there
Oh, tons.
that we can kind of see plain as day where it's going to go. It might revisit some of these recent lows, but we're sort of past the point of like a full breakdown of the chart. Next leg down is kind of the least likely outcome on a lot of this stuff. Not saying it can't happen, but it would take a catalyst out of a negative catalyst that we're not seeing. That would be a big surprise. Like that would be what would do it. But yeah, there's a lot of strength building. And for me, on a lot of this stuff, if the whales have to kind of completely shift their whole position, then that's strength in the setup. If they would just like they have to close these out, open something new, shift around millions of dollars, like that. Those are the setups I look for, because they're going to just want to take the path of least resistance, and so that's what sets up a lot of the moves that we see.
Yeah, yeah. I mean, I think right now we're even on the stuff that we're at, like the bottom on. I can use Crocs for last week. Probably not the best example on the chart because it is on a higher low. The trend is still there through time, but I was pretty adamant that 75 is what I wanted, and we weren't getting below 80. But when that was offered pre-market, and then maybe the first half an hour of the day, you have to make a decision there. And I'm with you that most stuff right now just not much downside if you can meet minimum requirements. If you're not saying we're going out of business or our revenues cut in half, just simple relief for these charts are right now is highly probable. I won't want to say it's going to be the way, but it's highly probable, and we've seen that. I mean, I could just list my list from last week, but we've seen that with Lemonade, PayPal, Generac, Clorox, all those names. I mean, that's all that
Yeah.
play was just some simple relief. Just tell me you're not dying. And we have a divergence. I don't know if I posted that in main chat, but the the 4, the 5, and the 6, the S&P. So basically your large, your small, and your micro caps or whatever, right? Your medium,
Yeah.
your small, medium, and largest. The smalls are like at the lowest level they've been since .com, financial crisis, COVID. Everything else is kind of, I mean, there's pullback there, but they're still at like 15 to 17 PE, where these small caps are at like 6. So they're just so undervalued right now. Anything that's not a big name that doesn't have, you know, over 400 or 500 million shares, like that's really where you want to look at. That's really where you want to be right now because there's going to be some relief, even if this isn't a change in the market. Even if I have SPY up right now, imagine this is August 1st when we started calling the downside. I mean, this trend can continue and we can have some violent relief rallies in this trend, and do very, very well. You just have to be patient. But you're not going to be able to do that with the larger names because they're going to just kind of continue to consolidate, basically, for the lack of better terms. Microsoft is a great example of that right now. It's just chugging.
Yeah, absolutely. And Nvidia was maybe my kind of my biggest read last week. For sort of the idea that we'd have a good week, just because I saw the reaction at 410C after it dipped under 400, and then it kind of confirmed what I saw with AVGO and all that. But ultimately, I mean, Nvidia on October 12th was in like the 470s, and so we're at 450 now. So we're not breaking new ground here with that, and we're kind of unlikely to. I don't think that we just rip through 500 or something like that. So So yeah, I would say that you're still kind of close to the vest with some of these mega caps. And when what you mentioned, I've been on this whole idea, this market breadth for months now. And my idea on it was that it has to resolve, but it doesn't have to resolve with mega caps crashing. The small stuff
Sure.
can get relief and move up and close that gap because it just can't stay where it's at. I mean, I don't think. But that's where I do see some of those smaller ones. And this last chance theme that we got going, I would expect that to continue. And you're going to see some pretty crazy moves out of some of that smaller stuff. And, you know, lucky for us, I don't even want to use that word luck, but lucky for us, it's a lot of stuff that we've traded before. And the relief move is going to be a move back to the bottom of a channel we used to trade. And I think that will be a theme going forward.
Shit, I ain't scared. I'll say it out loud. I am not scared at all. I mean, if you think I'm a decent trader, or I was a decent trader, or a good trader when we started this thing, and you don't think I'm trying to get better and perfect the system with Professor, you guys are going to miss the boat. I see it in my trading, but I mean, I'm the one doing the work, right? But what we are on and where we are going is not only proven itself already, but it is the most basic and simplest thing in the world to do. You just have to do the work. It's kind of why I refuse to read flow. I know what I'm good at, and I don't want to do anything but have a check there, right? I don't want to bring in um, my own bias. That's the best way to do it, because I've kind of
Yeah.
perfected that on TA, where I can look at TA and not have my own bias, and I think you've done the same on the flow. So,
Well, oh yeah, yeah, and my TAs come
oh
a
yeah,
long way, but
yeah,
it's like it's kind of it's where I want it to be. I don't get too deep into um you know just the some of the intricacies of it. I mean, particularly the ones that I see people use where I don't really think it does much for you. But even with RTL and volume profiles and all that, like I know it. I know some things about it, but I compare it to when I do what's called digital humanities, where I'm on like the English professor side of things, and I'm working with computer coders
hmm
to make these digital textbooks and editions of books and and studies of manuscripts and like all this crap like that. Like I need to know some of their world to make it work. Um, but I'm not trying to replicate what they do. I want really refined expertise in my lane where I can communicate with the other side of things. And that's how I look at trading, where I want to, just master this option flow to such a degree that I can communicate it and compare it to the TA, get those to line up, and then we go from there. So yeah, I'm very much on board with you on that.
yeah. And the other side of that, and I don't think any other person that has a Discord is going to say this one out loud, but you definitely, and probably three or four other people, values on his way, are going to be better traders than me. It's just I've been in the game longer. I mean, since I know more, right, or I have a little bit more knowledge base, I also don't have the ability to grow much farther, right? Like I'm
Yeah.
reaching my maximum potential. I got to do a lot of work to get a little bit of return. Where the people that are still learning, are still new, are still trying to figure out all the stuff, you guys, and you're making it, you have more potential than I do. Period. It just is what it is. And I don't think a lot of people see or value that or want to put the work in. But if I knew I could get better, a lot better, I would do more work. That's for sure.
Yeah, yeah, and I'll say this too, with full transparency, that I, in moving more into shares, I'm in a way trying to reduce the percentage return because you make it safer and you can go a little larger with it. Where like you're not just constantly trying to repeat the 60, 80, 100%
yeah,
contract thing. Because there's stress there, there's just a limit I think on sizing. and there always will be that limit. I think part of it's just the money I grew up with or lack thereof or whatever. Just that it's like I'm not putting 10 grand on
Yeah, yeah.
weekly options. I
Well, you
mean,
said it
that's
last
insane.
week. Five's kind of the number. You said five's kind of what you
Yeah,
need. I mean, you're building that. That's what I see. I mean, I've watched you the whole time, pretty much, right? And like,
yeah,
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 no, it's coming together real well. And I said it a year ago. Eventually, you'll be. I think I said it a couple weeks ago too. Like to 2025, you're 80% shares. But that's just
yeah,
the path. That's the path that anyone should be making. If you're out there trading options on a $5,000 account right now, and you work your way up to 10, 20, 30, and you're not thinking about shares, you're going to be back to square one eventually because the only thing that's
yeah.
going to
Yeah.
make you happy is continuing to up your size.
Well,
Um,
and then we get in these moments in the market where selling calls more so than buying puts is actually the best thing that you can be doing.
yes, yes.
Selling calls requires a larger account. It requires big positions in some of these stocks, and the ones that I read the best, Snow and like all that. I mean, 100 shares in those that's pretty pricey, even down at our line. But that's what I'm trying to build up. In a lot of this stuff. So those moments where people don't see me post a lot in collab, I promise it's not because I'm not looking. Um, I I put the same amount of time into this consistently, but if stuff's not there, I'm not going to post it. So that when you see a big stack of 30 contracts in collab in one day, that should kind of tell you something about what the market's about to do. And we saw that last week when I put Dash and Roku and all that stuff in there. Um,
If
so
you
that's
get
that's part of our process too.
if you get 30 tickers and collabs, I respond to them all, and I'm up at 3:45 West Coast in the morning. What else do you need to know?
Yeah, right.
So I'm being real.
Yeah,
3:45. I'm on the fucking West Coast. I'm up for what? For
yeah,
subs? Come on. Come on.
right.
I mean, seriously. I mean, I've thought about a way to do. I just don't like changing people's minds, right? Like, I want people to be able to, like, create stuff on their own. So, like, even coming in and saying daily forecast, today's going to be shit or I think today's going to be good. I want them to come to those points by themselves and then
Yeah,
trust that our setups and our levels are safe enough that you can't really lose if you manage your trade well. I mean, that's kind of what we do. That's what makes us different, right? I mean, that's it.
yeah,
We don't
absolutely.
come in and
Yep.
say load spy calls now, and then did you
Right.
bank? They're up 10 cents, and then look they went fucking 50 cents, so they went 400%. Like we don't do that's not what it's about to us. It's about being able to do this on your own when we're not here, and then when you do get kind of stuck, you can ask a fucking question and we'll answer it in 2 minutes. That's what I'm about. I mean, that's like kind of the grand scheme of it for me.
Yeah.
Um, and watching you, Pele, Pac, Goose, Value, Vegan, all grow, like it's worth it to me. Like that's what's worth it to me. It's going to be life changing for a couple of you guys. So
Well, and I'll say this too, especially for options traders. If you're in intraday options and you're not looking at what Hawk and Goose are saying with SPY, I don't know what the hell you're doing because a lot of times for me, there's a good signal for time to move out of something. Like if they see that SPY is going to hit some big resistance, that people are unloading calls and all this, it's at that point you start to take some risk off the table, especially for those real, those kind of SPY sensitive um, stocks because they're gonna stop, they're gonna slow down, and it's interesting how often that happened when AVGO was around that 880 level of mine. It's like, okay, SPY's at kind of a big moment here, decision point, and then on Friday it just happened to break higher. But it's not a coincidence that a lot of those pivots line up intraday. So you do have to be mindful of that, and these levels that they're talking about are just so crucial to everything that's going on during the
yeah,
day.
I noticed that even when they're talking, and I mean I read it all, but when they're talking, like if they're talking consolidation or pullback, it it's a good indicator for me that we're probably going to run to this wherever we are, pre-market high, yesterday high. That's probably going to be resistance. They're good at
Yeah.
identifying sellers, and you said that early on when we got together. Like I use the indices because if I'm in an oil play, I want to watch the oil ETFs, or if I'm in a tech, I want to watch the tech ETFs, and they
Yep.
kind of pick that up in the market as a whole, and even translates over to the small caps. So um, yeah, all information is good, but those two really kind of midday find I don't know how else to say it, but find where the sellers are at, or when the sellers are going to take over last few months for sure. And they do the same with
Yeah.
the buyers on the other side when we're in a hotter market. They're like, all right, this is getting ready to go. Um, yeah, just good visual reading that ETF or whatnot.
So I actually had a TA question
Yeah, yeah.
for you. Um, so something I see on Twitter, and I don't want it to this to kind of purely be anecdotal, but when when someone posts like there's like a Head and Shoulders on Nvidia,
Day
and
chart.
when it went when it went under 400, it's like, okay, we've broken below the neckline, and they see that as it's time to go short now. And then you see, what it like rips right back up. So my outlook on it is that on those kind of patterns, that it seems like you're late if you're entering short right there, unless you wait for the back test is seems like the most likely outcome. And then what we saw with Nvidia is the back test to me invalidated what what they saw. So I'm just asking you, like on these chart patterns on these larger time frames, what is kind of your general impression on those, the cup and handles and the Head
No,
and Shoulders
just
and
no.
stuff like that?
Like it,
Yeah,
no. I mean, I can find that stuff for you on any chart. Like I can manufacture that, right? Like with time
right.
frame and
Yeah,
stuff. So I don't really buy into that. It's all about like you're just trying to read consolidation with those patterns, right? Like that's really what those
right.
patterns are. It's consolidating and it's not moving my direction. So I'm saying it's in this formation, but it's just consolidation. And Nvidia is probably a great example. I got auto RTO right there, 271. It took off and gapped up after that. Like so, I would expect some consolidation after a move that it's had, um, and I do. I said it last week. It's either 400 to 500 or 400 to 325. I think I said it's got to pick a side. Um,
Yeah,
but it's probably not going to go over that five for a while, and there's no way in hell we're going under 300. It's just not. So you got to figure out this range that we ran into from these $130 entries at the first of the year. We're talking 250% or 150% easy. So for me, uh, first thing I wanted to say is like, if you're playing this, pick a fucking side. I would think it would be
yeah,
easier to buy calls on pullbacks here, and just
right.
when it bleeds out to buy the calls, as opposed to trying to short it at 500. Um, but we're gonna be here for a while. I don't understand like that part of the Head and Shoulders comment. Like, if you think Nvidia is gonna be anywhere but 350 to 500 for the next 2 quarters, I will take the bet. So play the
Yeah,
range. Like figure out how to play the range, and either you're playing below 400 or shorting at 500 because you're fucking late. Um, Very few people are doing what I'm doing and just holding on shares because
right.
you
Yeah,
are so far ahead, right? But I
yeah,
mean that
yeah.
might I talked about it early October. Like my account looks better when this is at 500. Um, so I guess I have that perception, right? I'm a shareholder that's way up. Um, I expect this to kind of consolidate around 380, 420 before we do make that leg up and confirm five. But that's just my
Well,
thesis, right?
and that was this part of this relates to, like, I know it better on this side of the option trigger thing, where their trigger is so far up or so far down that the move already happened. The safest move already happened to get to that pivot. And a lot of times the pivot goes the other goes the other way. And Tesla's a good example. I said 280 was about it. It did go well recently. That that was like the move before went almost, I guess, to 300. But the point is, it was still 280 was still the pivot to me, and that's where we saw a breakdown. Saw a breakdown again. My line below 192. We didn't quite get there, but when people were saying that the breakdown at 200 is a short signal, that's an indication that we're going to go to 160, I was apprehensive on that, and I went long Tesla just because I saw the option flow and it sort of looked like that. But the point is that that there's so many of these confirmation signals that they have, that you wait so long for confirmation that you can't really squeeze that much more out of it. If you were waiting for 200 to break down for Tesla, you had maybe 2 days where you could short that to about 195. Whereas on the other side,
who does that?
I I know. I mean that's the dominant paradigm on Twitter for options traders that I see. Is
Okay.
these, they wait for it to break all the way down, and then that's where they see, the entry happening. Now a lot of times what they do, they kind of spin the results. They'll throw some big spy trade where they had one contract go 300%, to kind of keep up appearances. But yeah, their reads are just so late. I just I don't know. It's like looking for shapes in clouds or something to me. There's a lot of confirmation bias with it, and I just it's so different from what we do that it really stands out to me.
I don't like bringing this chart up in here because we we released this to the public, but fuck it at this point in time. I don't think they could trade it with my information, to be honest. Um, uh, if you wanted to short Tesla, you should have the perfect entry because I was so fucking early on this with a thesis.
Yeah.
Um, your 192 level held up better than mine, but my volume profile held up fine. If you look at this chart, this is back when I was on the 150 one. We won't talk about the 100 down here. We won't talk
Yeah.
about the 150 here. And I said 184, but your 192 was strong here. But we have nailed this over and over again. I'm just always cheap here. Sorry, people. Um,
Yeah.
but those moves, like when it happened, like you just said, it's an hour. You have very limited time to get into Tesla pullbacks because they get eaten up. And that's just the mentality of that stock. So
Yeah.
shorting at 200, in general, shorting at a Sykes seems like a bad idea. I would play calls off Sykes because you're
Well,
probably going to win 100% of the time on that. But
the short entry, if you missed 280 that I posted a lot, was 220, and it did reject there several times. So if you're on like the short term options trades or whatever, but when I short at 220, I'm not really even looking for it to break all the way down to 200. It's 220 to 215, maybe even 220 to 218, depending on what you're doing. But if you're trading Tesla, like I got to see something reject a couple times, build up some history, and then we go from there. But yeah, 200, I just saw it too many times where that was the beginning of something big, and maybe we're seeing that again. It sort of just depends from here, but it's a little bit like, kind of when you bounce a super ball and then it starts bouncing less and less and less and less. There are going to be some charts like that to me where they made these big move
tightening,
down,
yeah, talked
and
about
then
that
they
last
tighten
week.
up.
Yep,
Yeah,
yep.
yeah. So that'll be a theme in mega caps too. But
Real quick, because I want to push the conversation this way. If you can see charts right now, I assume.
yeah.
So Tesla broke the 200, right? Popped down the
Mhm.
volume profile right back up. That big 200 break is supposed to be the death of everything, right? We talked
Yeah.
about it last
Right,
week.
right.
We
Yeah.
talked about it last week here. Broke the 200, or a couple weeks ago here, breaking the 200. That volume profile is way more important than anything right now. That 1 year, especially on mega caps, that's just your center line for the year to date. But
Yeah.
I'm seeing that a lot lately. That's your pullback you want. Especially, let's flex grade this real quick. When you have larger um, volume profiles on bigger volume profiles on bigger time frames. So we can just play
Yeah.
back to the 3 years, the 440 here. Spy's probably not a great example, but this is a setup I am looking for um, in general because it kind of will go across all charts. It's where I think the big money's at. I mean, Spy obviously you've seen that a couple weeks ago, but
Yeah.
um, yeah. So to Spy, kind
Yeah.
of the switch to that. We covered two candles there this week. I didn't think we had that much gas, to be honest with you, in us, just in general, even with the first of the month, kind of the S&P stuff coming up with the restructuring, the early January, early December, I believe. But I do notice since August we have 3 down, 2 up, 3 down, 2 up, kind of 3 down, 2 up thing going on. Um, the trend hasn't changed. It's kind of confirming itself. I think a lot of people are going to get wrecked by this. Um, I'm not going to ask you for 60s popping up, but that's the
Yeah.
question people should be asking if they're thinking that we've changed trend already. So I'm going to ask for those
Well,
people who think we've changed trend already.
so no, I don't have all-time high flow, but I will say this that the beginnings of a trend change happens in sold puts. And I've been like for the last I don't even know how long, months maybe, that puts dominate the open interest on SPY. And these had been ask side down to 400 and even down as far as 380 um, recently. Well, that's changed a bit now. So 12, 15, 410 is heavily sold. 12, 15, 400 is heavily sold. Um, Everything below that is 80, 90% sold. So while they're not really stepping into calls and kind of putting their neck out there on that quite yet, there's been a shift to where they're now selling these puts. Some are selling to close because they're profitable and maybe they hit a stop on the way up. But there's a lot of sell to open seemingly too, where retail stepping in and thinking that, oh, we're going to move right back down to 400. The people with the money that are selling them are saying, no, we're going to build some strength here, and 420's about it for the pivot. So I see that narrative is emerging to me in options right now. If it gets supported by calls, that's when we start to take off.
Yeah, I said it in voice, or not voice, chat, I believe, before. I went on a limb even before the Feds, and I said I want to say 413 to 430 ish, maybe 435. I'd have to pull it up, but I think that's where we're stuck for the rest of the year. Obviously, SPY will have breakouts and breakdowns out of that zone, but I think the meat of the candles, if you put a line up, that's where we're going to be the rest of the year. Um,
Yeah.
Without some like news event to push us either way. Um, yeah, this is kind of where I see it. We're gonna have. I mean, you're gonna get that though, right? These big weeks. Um, for me, it's not really about anything but volume, P, and that's what came back last week. It said it Tuesday or Monday. That's not retail. There's no way
Yeah.
in hell that was retail buying. So that is gonna what dictates how much SPY moves. Is how much not retail people put their money back into this thing before the first of the year. Um, just to kind of go off last year, they sold a lot in December, but bought right back in January. So I'm not against that happening again and keeping us in the low 400s. I mean, that's that kind. I mean, if you look at SPY on the weekly trend, that's where we are. Um,
Yeah.
yeah. So I mean,
Absolutely.
that's kind of where I'm at. Shortening it up to this week, there's a lot of news, ERs, stuff like that going on. We're not even talking about the budget right now. We're just talking about Israel and Ukraine money. So I think the budget keeps out of the conversation for one more week. But I think we're also limited on upside from here. What's the biggest name we have this week, ER wise, off the top of your head?
Disney.
Disney, yeah. So we had a lot of the Tesla. Is Tesla this week?
No, Tesla already
No.
reported.
It's
Yeah, a while ago.
it's no, that's not a big one. Yeah, so there's not like super huge names this week. So I just don't think we can get as much gas. But Um,
And Apple earnings, that that played out just about exactly as I predicted, and it wasn't tradable. Like that was kind of the thing. I was like, the earnings, the numbers are not going to be great. They're going to have a decline, but unless that goes down 3-4% and sustains it, it's not going to have much of an impact, and it didn't. And so getting through Apple earnings, I think
yes.
was pretty big, um, because that big thing, that big uh, albatross is not hanging around the market's neck now. But yeah, I was just looking at earnings. A lot of oil this week. That's kind of an isolated
Well, yeah, there's nothing that's going to move
sector.
SPY
Yeah,
10
yeah, no,
points. That ain't happening.
no,
So I think
yeah,
I
it's
think we're
all
kind of range bound this week. Um,
yeah.
but we found a floor, which just happened to be my 1 year volume profile. So um, that's going to continuously be a fight. Well, I think we're running out of downside. I said I've kind of been a dick about it. Wake me up when we're at 370, right? But I mean,
Yeah,
I don't even think we're going to really touch four, and if we do, it won't be for very long. Um,
right.
yeah, I just don't. I already wrote my numbers down. I'm not telling you. You're just gonna have to trust me. But it'll make sense when I do. So what do you got? If this is the last week that I'm doing this without us posting in the group, if we keep Bob Barker and each other.
Yeah, no, I'm with you. All right, so I'm gonna say my downside will be 428.67,
Okay.
and my upside 439.19.
Damn, I am way wider than you.
Oh, nice.
So I went with this my local 20-day volume profile down here, which is 422.59 for a downside. I don't think we get all the way to 420. So you have a quite the bigger bottom. You don't even see us getting to 425. So I'm interested in hearing why you think that. And then I 443. This top guy right here. I'm just going with volume profiles. On this one, the bigness of the candle last week lets me know that if volume comes back, it's going to be hard to keep this thing inside of a range. Um, and I'm hopeful, I guess, that we did make the switch and we're going to have volume back here the rest of the year.
No, yeah, I think that's solid. So, yeah, my whole my take on it, purely option driven. It's where the strikes line up as far as the on the ask side. So that's kind of the ask side range. So I sort of going with that, and then looking at the body of a couple daily candles to zero in
Like it.
on the
So
sense. Yeah.
425 not breaking. Run me by that.
Just too many sold puts there
Okay.
for me.
I'm,
Like I
I'm
think if I think it'd be a big wick if we take go down there, and
okay.
it's not going to hold. So
I think what dictates that and kind of why I went so much of a wide range is if we do open above 430 Monday morning. If we don't
mm.
pull back below 430, if we open up here at 432, 435, 437, it's going to be a different ball game next week. I expect to pull back to under 430, 429 open Monday morning.
Well, yeah, that'll be interesting. Um,
Friday was too good.
Bitcoin, it was, yeah, and I will say that the way Bitcoin is hanging around this 35K number is what kind of interesting to me. That I could see that making a move to 38 to 40 or so. And while that doesn't always line up with Nasdaq these days, it is sort of part of the picture too for me.
Well, you have to think about it currently. I agree.
Yeah.
I agree. All right, P, you ready to get to work?
Yeah.
Perfect. Let's do it.